I'm going to be on in about 3 or 4 minutes, so I will wait for some folks to connect, and then I will get started. Okay, my apologies for the delay. Can you guys hear me okay? I hope the mic is not, or the audio is not blowing your ears out or anything. But I have had some issues recently with my mic, and okay, cool. I could always turn it up a little bit, but it's part of the reason I wasn't putting out as many YouTube videos, as I was just having problems with OBS and Linux, and it was, I don't know, just had to tweak it a little bit. So, anyway, what's up, Jonathan? What's up, Emmanuel? Nice to see you, my friend. Good, good. So this chart over here, you know what, I've got all kinds of stuff on my desk here. Water bottles, and espresso cups, and pens and pads. Let me get this out of the way. Walking on my treadmill as well, jamming. Okay, so this is a weekly chart of the S&Ps, S&P futures. So it doesn't have much on it, except if we zoom in a little bit and you look at this right side profile, you see that? Oh, here. This volume profile is based on visible bars. So as long as we see all the bars up to this point, we'll see this extreme LVN here. Here, let's do this. Let's hide the drawing. You see that? I mean, do you guys see how crazy? Let's see, using a new tool here. You see how crazy this is? there's like no volume there. So if you think about it, everybody that bought here, as price comes down, they're going to want to sell through here. And there's always going to be value people that buy these. So we may get a big move, just based on this weekly chart, back into this volume node. I think it's actually very likely. Someone was talking about 100 SMA and soft landing. We will look at that in a moment. We may get a move and come back through here, back right into this area. So if you think about this huge volume node, so let me take this all off here. Now these are, here, let's do this. All right, so if you think about this big volume node here, that comes from all of this, right? Double dip, and then boom, explode out of it. Test it again. Well, the LVN area real quick, and then whoosh, right back up. Okay, so, and I'd venture to say a lot of this movement was probably even overnight, which is why it's such a low volume node. Okay, so what happens when you get a big volume node and then another volume node down in here is that the longs from here start to capitulate and sell above break even. Now remember, this is just an index future, so it represents a bunch of underlyings. So those underlyings in mass are going to start to sell through this area. We'll probably overshoot, hit stops, and then this area here might become some little short-term support. I say short-term support because, and I'm not all bearish or anything, right? I'm going to look at sentiment as well, because if everybody gets off sides, and there's such thing as a false breakdown, we're not there yet, but we may poke out and then shoot back up. But when everybody gets off sides, then usually bigger money likes to take the other side, and we bounce. And we shake those people out, and then maybe we roll over again. Okay, but right now, what we have is most definitely a balance area. And what do you know about balance areas? They like to double. So, you know, while here, let's get rid of this. All right. While everybody's thinking, oh, LVN, I want to buy it, if we double balance, remember, this is one huge balance area. If we double balance, you're looking at something like this, right? So, and remember, this is a weekly chart. So that happens often. So here we have one bounce, boom. Second bounce, down. Okay, so we have an upper trend line now established. But, you know, this is a low, this is a low. Now we put a trend line here. We're breaking that. And it would not surprise me for us to enter this LVN for the aforementioned reasons. So I'm keeping that in mind. So I'm just starting with this higher time frame chart to give us a little bit of perspective, essentially. Someone mentioned the 100 SMA. Now, again, this is a weekly chart. And we'll get into the COT in a second, but this is a weekly chart. So okay, well, let's go see how the market has reacted to the 100 SMA before, right? So undoubtedly, everybody's seeing this little head and shoulders thing, right? Left shoulder, pullback, head, deeper pullback than the left shoulder. So it's a downward sloping neckline. It already establishes now a trend, because if it was a completely flat neckline, it'd still be neutral if we were at that point. It's not breaking down yet. Okay, so we've already established a downward sloping neckline. So everyone sees this head and shoulders. Now, am I a big fan of head and shoulders on the, say, daily or weekly? I'm actually not, because everybody sees them. And more often than not, now if everybody's bullish right now, and this was in play, and when I say everybody, I mean mainstream media and a lot of retail traders, right? And however you want to track that sentiment, but that's kind of generally what I mean. Okay, if they're all bullish here and people still notice this, then I go, oh, well, maybe it will play out. But if everybody's bearish, and we have a bunch of other things like, we've already had our first rate hike, right? We have seasonal drawdown already, okay? We have the tech sector getting decimated, the Cathie Woods of the world, etc., getting decimated. But we do have inflation, and it's a normal response by the Fed to rein in that inflation by raising interest rates. But if you go look historically, after the first rate hike, typically what happens is you get some bearish movement, but then it's starting to get all priced in. So you get this big downward movement, and then as long as the economy is quite stable and has an upward trajectory, which a lot of unknowns there, but everything's looking good, credit spreads look good, etc., we typically move higher. So it's usually an opportunity, right? But as Walter Deemer says, when the time comes to buy, you won't want to. And if you're all bearish and feeling like it's the end of the world, and so are most of your contemporaries and folks that have big followings, essentially, if they're all screaming bear, then you may want to do the opposite and play with defined risk, right? And you don't have to step in front of the falling knife. You can wait for some bounce as well, and then stop under the lows or something like that. So, and that's for more of a long term, right? So short term though, we're right above this LVN, and we look poised to drop into it. Now we just had end of month high volume on lows. So if they're going to bounce it here and stay within this box, they have an opportunity here to trap a lot of people here. So that's something to keep in mind. Yeah, Jonathan says, I was told April was a bullish month. Yeah. So anyway, I got off track about the 100 SMA here. So here we had this, so just kind of keep it in mind a little bit, right? We had this inverted kind of head and shoulders look going on. A lot of people saw this, right? Left shoulder, right head. And it started to break out, and then we had COVID. Whoosh, the market reversed and continued its original trajectory from the head and shoulder. Actually hit the measured move, then pulled back massively. It's so funny how the COVID thing was a little blip. Well, a little blip. It was a big blip. But the market continued on and did a measured move right up here to this area and then massively pulled back. It's almost like resume program. I find these things kind of interesting to consider. So anyway, back to the 100 SMA. You could see that it acted like resistance here. Market bounced, went sideways. Boy, I remember these times like it was yesterday, 2018. I remember trading NASDAQ in that zone. That was rough. That was really rough. So was this. This was really rough as well. rough times. Anyway, I had my biggest drawdowns in this area ever. Anyway, I won't get sidetracked on that. Risk management for the win. Or for the loss if you don't follow risk management. So it acted like support here. We punched through it, and then we came to the 200, whoosh, right back up. Acted like support here, acted like support here, acted like support here in the COVID. Big bounce. Plunged right through, and then massive capitulation. Some funds blew up, blah, blah, blah. If you have the ability to go back and look at these days in Sierra chart, which you should in replay, you should. Look at these right at the lows here, right around the 2220 level when it was dropping there. Look at the E-mini futures. Watch the tape and everything like that. There was a fund that blew up, and the CME actually slowed down. They do this from time to time. They slowed down the processing of orders to allow somebody else to come in and scoop up all of those funds blowing up. And I saw it in real time. It was really cool to see. And I researched it after the fact and looked for what was the cause, because I noticed, whoa, markets are like paused here, but it's not like a 5 or a 10-minute pause. It was like, oh, I forgot exactly. It was about a 10 or 15-second pause. And it wasn't my data feed, right? It was across everything. And I had, multiple platforms open. So I was checking it on because I was like, what the heck's going on here? But I could see the book changing, right? And so they kind of allow this. They partner probably with someone, and someone steps in and says, okay, I'll take all those contracts. Capitulation, right? There's usually somebody on the other end of high volume capitulation. It usually represents like the best entry, right? Because capitulation is typically get out at any cost, including a bad price, right? So just by definition, that is the case. So anyway, here, the 100 SMA has acted like support and resistance several times. So now we're back to it. So there is a chance, and right now, it happens to sort of line up with the edge of this super high volume node and with the lows down here. But can you imagine if we break these lows, stops underneath? So if the market capitulates into this zone, I'll be looking intraday for some sort of capitulation event, at which point I will take a shot on some sort of footprint reversal. So I'm thinking about these things as I'm charting, even though that's not double balance. Double balance takes us way down here. So keep that in mind as well. So watch the news, right? Watch the sentiment. Watch the bond market, right? All of these things are going to matter. Interest rates and folks' reaction to it. I mean, watch Tesla. Tesla has the ability to potentially, it's gone. Just open up a Tesla chart. It's gone really far, really fast. So Jonathan, I'll be monitoring both. I'll be monitoring the DOM because I'm really good at reading it. And I have it set to a very low refresh rate, something like, I think 20, maybe 30. Maybe 30, I think it's 30. And I got the MBO up, and I can see these MBO orders, some of them at least, coming in and out. And you can see when some people start to chase. And then when price just starts to fall, and then you can quickly look. So my DOM functions a little bit like a footprint in that, God, I'm getting sidetracked from the high time frame. But here, let's go to it real quick. Gotta find the lower 49, and then we'll get rid of this. Okay. So look on this left side. This is a lot of screen. It'll come up right now. Okay. So look on this left side here. Maybe you guys can't see it because it's really zoomed in. But you see this? This is a delta, net delta. So in real time, when I'm watching my DOM and I'm seeing like MBOs, like big orders coming in here, right? I show anything 10 or greater on my MBO. And then I see deltas coming in, and then I see the volume here on the left. If I see this going here, let me turn this on. If I see this whoosh in 1 second, and this whole area just goes whoosh and fills in like that, and then it's like they're buying, right? And then all of a sudden on the MBO, this all fills in with big asks and prices here, and they just go whoosh, and they take them all, right? And then the market comes back, goes way up, and then whoosh, comes down, and this gets whoosh. So tons of volume in a small amount of time. I'll see that on the DOM, but I'll also, so let me go turn this off now. And let me go right, upper 49, right side. Okay. Let's make sure that this is actually centered where I should have it. There we go. Move it down a bit so it's a little more centered. Okay. I'll also see it right down, right down here in the volume per second, and that's this here. So this, when that happens, like, we were thinking about the DOM earlier, and price is going whoosh, right? Think of this as a DOM right now, even though we have a DOM here, but price going whoosh, and then it's back up. And I'm looking over here, and I'm looking at, say, the bar, and it's lighting up orange, and it's like 800 or 400 contracts per second, right? That's a lot of contracts. I'm going to know that's a capitulation event. And if it happens to happen in, well, let me turn this off real quick. Shift out of here. Left 27. All right. So if it happens to occur right in this volume node here, I'm gonna know about it because I'm gonna have lines in here, and I'm gonna see those lines on all my low time frame charts. And so if I see something like that, and price, say, has already moved, just giving an example, in an Elliott type wave throughout the day, and it's, let's say it's 11:30 in the morning, plenty of time to rally, and we get a 135 extension intraday. You're like, what the heck is that? So Elliott wave, right? Whoosh, 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 whoosh. A, B, oops, that's a little off. Let's imagine all this is not supposed to be there. C. Okay, so 1, 3, 5. Now I'm doing this for the upside, and then A, B wave, which is a rally counter trend, and C wave. All right. So here's your typical Elliott wave, right? Very simple. So if we invert this to the downside, it's like markets are shoo, 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 and then we get a C wave, and it's 11:30, and you get this capitulation that we're talking about right in here. Now we have a trend line, something like this, right? Markets are straight down, huge volume, and it's 11:30 in the morning, and markets are on the weekly volume profile. We've gone through the LVN, which is what we're referencing up here. Oops, so it's there. So anyway, we're coming in to this zone. We've hit this volume, and the market is just capitulated. Because remember, these were all buyers before, big volume node, and now they're like, get me out. And this index represents a bunch of underlyings. So the underlyings are going to be doing that. And we have like negative 3,800. Nice NQ tick. It's 11:30. We've hit wave 5, which is usually the largest wave. They're all capitulating. We see all of the aforementioned price action on the DOM and the footprint. And we get this. I will look to buy in this area, scale in. I will stop out if I'm wrong, I don't care. But I'll give it a shot. And I will try to hold it, take off some of the trend line. If you bust through the trend line, I will take off some here, whatever this resistance area is, this pullback, and I will take off here, and then I will wait and hold it. And if it, through this area, retests the breakout and then bounces here, if there's a big volume node here and then aggressive buying above the volume node, I will buy here. I will add from this position. Now note, if I get it, let's say I'm here at 2 Rs for the first takeoff, and then the second R is the second take profit is 4 Rs, right? I'll be adding to this position right in here, but my break even will be somewhere down, way down here. So, but on the add, I will stop out here. So regardless, I'm going to have a winning trade, okay? And then I will stop out of whatever I added here, just above break even. Because in most cases, you'd really, I mean, as long as you're making a higher low relative to this zone, you could stay in the trade. But for me, the best breakouts hold this general, now there's a lot of lines, but that's okay. Hold, you guys see the lines that are moving. Hold this general zone. You start to break it and come back in, and if there's a bigger volume node here, I'll put my stop into the volume node, because what should happen, say if the volume node ends right here from this down move, and you extend it out, I'll put my stop somewhere here. And that's the stop for the original position, just to give it room. So if it goes a little further because there's volatility, then I'm still giving myself a chance to play against the trap traders from the volume node. But all of this aforementioned price action lends for a good setup. So to answer your question, Jonathan, in as much detail as I possibly can, that's how, this is one little scenario that I would play. Just one. I've got probably 15 or 20 of these in my head at my disposal. But this is kind of a classical one that everybody can, this represents a very good setup. And it happens quite frequently. So there's our little, I don't know, rabbit hole there. Okay, so back to this weekly chart. Let's see. Turn this off. Oh, and I'll be watching the TPO and other things like that too. All right, see what the profiles look like, blah 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 blah. But that's too much for this explanation. So anyway, get rid of this. So we were back at the 100 SMA looking at it. So there's some interesting things to look at. So right now, asset managers are underexposed. Okay, they were underexposed, and they sold like crazy into these COVID lows. Now, interestingly enough, look at this. The dealers sold before. They were already getting short. Asset managers moved the market. So anyway, asset managers been getting more short from this point. Okay? And that kind of, they're anticipating essentially Fed hikes. So they're reducing exposure. The market has gone up a bit still and done this sort of, for now, we'll call it consolidation pattern. But they're underexposed. Now, if they start to fall even further, and look here, by the way, look at dealers getting a little long. So anyway, leveraged funds also getting a little bit longer in this decline. So anyway, we break these lows, a lot of people are going to capitulate. We make it asset manager selling. And smart money, they always scale in on declines. Always. They don't just buy the exact lows. They're too big. They got to do it over a longer period of time. They are going to start buying this decline, I would assume. Right? But we'll see. We'll see if the Kathy Woods, etc. of the world start to capitulate or change their tune. These are always interesting things to sort of watch, right? To get sentiment. And pay attention to your favorite, really popular, we'll call it retail trainers or gurus or whatever, and see what their sentiment is, because their sentiment is going to then get reflected back into the 35 or 100,000 people that listen to their every word, right? So if they start to get a really strong lean, right, and prices have already declined into an area of support, well then think about doing the opposite. Yeah, so there's all these things like sell in May and go away, right? But these are so generic, and the market is, well, this is probably not the place for a sentiment and fundamental analysis education, but I am a firm believer in sentiment and some fundamental analysis. Sentiment is what drives the technicals. Think about that. If you can figure out sentiment, you know what traders want to do. key is, what's the sentiment of the weakest money? You say, it's impossible. Okay. Then don't attempt it. Play only the technicals. But if you think you can get a grasp on sentiment, then I highly suggest you try, because it is important. So, CNN, Fear and Greed. Helene Meisler's pretty good at sentiment. Look at some of the things that they talk about. Walter Deemer, right? I've bought a few bottoms myself and tweeted them in real time. So anyway, I'm kind of a counter trend trader for the most part. I tried to think like the sharks instead of just when everybody yells shark and runs, that's just the whole thing. Anyway, I'm getting sidetracked. All right, let's see. So we've got this. So we've kind of covered this weekly enough, and I want to put the LVN back in, so I need to go in and manage these trade drawings. And where was it here? I think it was this one. It's hidden. Yeah, there you go. Where's the unhide? I don't use this very often. Where's the unhide? Oh, show. There you go. Close. All right. So there we have this. Now we want to know, let's see here. My little girl is making all kinds of little squeaks. It's pretty cute. All right. So we need a reminder of what is here. So let's do this. Let us put a... just thinking about what color I want it. I'll do green zone. Doesn't necessarily mean buy, but we will do. I'm looking at the candle structure here, and I'm also looking at where the volume is highest. So you see this kind of lower volume pullback, and then whoosh, reject, right back through volume. You can see how that trapped a lot of people short term on the weekly, because as soon as you got above volume, it's like, oh no, we're wrong, and then whoosh, straight up on the weekly. So again, that's 3 weeks of buying, right? So you can see how the volume profiles still work really well, just like intraday footprint action. Same freaking ideas. Below volume, back above, everybody gets squeezed, right? So you get the typical fake out and then whoosh, and you're still making higher lows on the weekly. So as soon as it came back through the volume, you should be already thinking, oh crap. And especially if we came back through with viciousness, you should be thinking, hey, maybe get long for a swing trade on SPY, or buy some call verticals or something like that, so they're not losing too much theta. So anyway, I'm going to put a volume. So I'm looking here, and I'm looking where the actual volume edge is, and I'm looking at these candles here, and I'm thinking about where, if the last time we came through this area, shorts got roasted, what are they going to want to do? On a very high time frame, guys, very high. What are they going to want to do? And remember, these index futures represent underlyings. So what are the bears going to want to do if we come down here? Sell more? No. Psychology is they're going to want to cover. So where might we expect a short covering bounce? Here. So where? It's that node, or even above the node. So maybe the edge, right? So where this bar opens on the weekly, closes here. You see how the here, let me see if I can get the microstructure for you guys. By microstructure, I simply mean the structure of the candlesticks that kind of tells us a little bit of a story based on its movement. Doesn't mean micro meaning small time frame or small anything. It's just the small structure of the candles that gives us clues about price action. So that's micro. So here, all right, big move, a down move back through the volume node. Okay, so you know here that this volume node through this area was at least developed in these last few weekly bars. We can go back and look at it on daily charts and see where the volume was put in. Was it put into the upside here? We don't know. But anyway, we know in at least the last 2 bars on this weekly, the volume was put in. So therefore, if the volume was put in, we got above that volume. Look how this goes. We have the open right here of this red bar. We come down, squeeze into low volume, whoosh, right back up through the volume node. Now here's the open. Then the next weekly, where do we go? To the open of the weekly. And bing, bounce. Even a little gap there on the weekly. So Sunday night, probably Sunday night, Monday, gapped up, right? Shorts were completely screwed. Tiny little pullback here and whoosh, straight up. Little profit taking occurred up here, right? Out of this distribution. Big sell. Longs took profit, didn't even go to the gap. So you see, we have all these clues that shorts were really in pain here. So if we get down below this low into the LVN, where shorts likely going to still be in pain. They might be in pain near the lows here in this extreme. So sometimes when we go to the extreme LVN, we come in and whoosh, bounce up. But remember what's above us now. We've got balance. So if you break out of balance, likely to go a little further. So I'm not looking at this as like a huge buy zone. It could be, but it's just not my play. I prefer to think about it from this perspective, where the shorts are likely still very trapped because of what we talked about in this area. Okay? 3990s, Emmanuel Santos says, is 100% of the lag down starting April 22nd. The leg down, starting April 22nd. Oh, okay, cool. So this is interesting, right? So that should be useful to you guys. At least, if anything, take away how I think about it. Not everybody thinks about it like this. No, it's all good, my friend. I'm just a little slow sometimes. So looking at that. Now, again, we got balance. So double balance. So let's put a little tool on here. Price projection tool. I don't know. I think this does opposite. Let's see. Dink. Yeah, it does. All right, so double balance. 100% is, I don't know, roughly here in this zone. 36.50. Now, is there anything at 36.50 that's relevant? So let's get rid of this. Take your time. 36.50. Right in this area. Little volume node. It's right above this fairly big balance area. You're like, what are you talking about 36.50 for? Well, it's possible you break this volume node. A little less volume, then you run back into the second volume node down here. And then that's really heavy support. So it's interesting. This is 100%. So I like to mark that up. So I don't want to put the projection tool, because all this stuff overlays onto my low time frame charts. So I don't really want to see all this junk. If you go to my daily chart right now, you'll see this box in there. Okay? And I don't even want that in there, because this is just part of me showing you guys what I'm thinking. I don't need to put a box in here to know it's right here. Right? I would just go measure it, put a line here, and be done. Right? But I'm doing this for your guys' benefit only. How long have I been doing this stream? 40 minutes? I'd typically be done in about 50 minutes with the NASDAQ NQ, doing all the TPOs, all the 30-minute trend lines, all the weeklies, all the dailies, and all the low time frame 5-minute charts by about 50, 55 minutes. Done. Every level on the chart. So this takes me so much longer to do, but today I'm doing it for your benefit, and I'm walking the whole time. So it's good for me. Okay. Yeah, I'm on my underdesk treadmill right now, just jamming. 2.4 miles an hour. I don't get sore on this thing anymore. Or tired. I can go 3-4 hours. It's great. Okay, so 3650. So let's just put a little zone on there. I'm so used to going to the top of my screen. This takes a small portion of my left screen. Okay, so let's put a little zone down here, 3650. And we'll just do this. We'll say, all right, weekly HVN and 100% of 4125 balance area. Okay, a lot of this is for you. I'm going to shorten this whole thing up later, but for the purposes of this video, this is going to be nice and long. So it's there. That's about all I care about right now. If we go lower, I'll analyze it the next week. Remember, these are weekly bars. So do you expect a weekly bar that goes all the way to here? No. Could it happen? Yes. If that happens, are there bigger issues? Yes. So then I'll be spending a heck of a lot more time charting the market every single night because there'll be more opportunities. Appreciate that, Adrian. My wife actually wants to go take a walk. It's sunny and about 65, let's see. Sunny and 73 degrees outside at 11:44 a.m. But I said, no, babe, I gotta walk and chart. So she's like, okay, we'll go later. I'm like, yeah, we'll go later. Okay. But I hear my little girl squeaking. She sounds pretty cute. Okay. So we've got this done. Now let's move over to the daily candlestick charts. Emmanuel, you do notice correctly, and I created a video on how to create those. So go look at my Sierra chart, educational, I don't know, it's maybe 10, tips and tricks number 10 or 11 or 12, something like that, I think. You'll find it. It's in the description. Something with control bar buttons, how to customize them. I made a few errors in the video. You can make the control buttons any size you want. You know what I did for a lot of my buttons? For at least the DOM, I actually took screenshot images of the actual Sierra chart DOM buttons so they look exactly the same. So if I do put a trade DOM up like this, see how the buttons look the same right up here? So that's why I did that. I made them a little more narrow. Squeezed them a little bit for room. But I do that stuff so that it's the same. Like break even's a little different because the BE, I find it to be hard to find. And I do use that once in a while if I can't get out of a position fast enough. So there you go. You can just take screenshots of a lot of this and then convert it to a bitmap using the steps that I laid out in that video. So there you go. No problem. Let's see. Yeah, my video may answer your question, Emmanuel. Probably will. Yeah, you know, Kathy Wood went on CNBC and looked a little panicky, and started talking about she's still right, blah blah blah. So we'll see. Maybe she's different. But she's no Warren Buffett. So we'll see, you know. Markets are made of capitulators. So anyway, let's see. Oh, you guys aren't even seeing the DOM. What the heck am I doing? Here, let me turn this off. I'll show you the DOM again because I was just talking about it, assuming you guys saw it. Lower. So many buttons. So you see these buttons up here. And you see how they're the same? So I just took screenshots of these. All right, once you get this all customized or whatever, just take screenshots. Where's the feed for your COT reports? Looks better on the chart. Yeah, Jonathan, I hear you. I feel bad as well. It sucks, but hey, that's what makes trading fun. If you could learn these things and learn that, the markets are in a, 100-year plus bull market, you have a big leg up on all the people that just follow the news cycle and worry about the next big crash all the time. Stocks have only gone up over the last 100 years. And if you look at like a yearly chart and look back at the last 100 years, or even search for it, you'll see total bull market pullbacks have been minor. So if you're young, buy dips and keep investing. If you're a day trader, well, it doesn't apply to you. I do both. I'm investing, I'm day trading, and I swing trade stocks. So, and I only talk mainly futures with you guys. I used to do a weekly stock charting extravaganza, about 3 hours long, almost every week, and it was just not as popular. So, but anyway, right? So there you go. These buttons, they kind of all match. But again, I don't use these trade windows. I just have all my buttons that I need up in here, so it's all good. Let's see. What am I doing? All right, let's get over to the daily charts real quick. Or real slow. Top 49 left side. Bing. Okay. So here we have the E-mini daily chart. So let's. My little girl is just squeaking away. He is a cutie. All right. Da, 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 da. Can you guys see why I bought at the close? Can you guys see why I bought at the close? I tweeted it in real time. Walter Deemer, when the time comes to buy, you won't want to. I got long, 41.20. I wrote it out. Nice bounce, intraday scalping. But I had the daily overlaid onto my low time frame charts. So on the low time frame charts, when we went through it and we got massive stops, guess what I did? And then we hung out at 41.20 for just long enough for me to get filled. And then, whew, why? High time frame stuff. It matters. So this trend line provided a sweet scalp play right near the close. And I took it. And I alerted you guys. All in real time on Twitter. To the second. It was still at 41.20 when everybody had the tweet. Emmanuel, it sure would be nice. Maybe we can connect on Discord. I'll DM you or something. We can connect one of these times because I've always loved talking to you. You're serious about trading like me, and you don't just leech off me. You share your stuff with me, and so I don't turn into your personal Sierra chart help, which that's not why I do these videos at all. But you can't even begin to understand how many people think I'm their personal Sierra chart support. It's crazy. I'm gonna start doing email responses that are generic. Just copy and paste. It's ridiculous. People don't know. People don't know that there are 20 or 30 other people asking the same things of me every week via email, which is why I took my email down off the YouTube because it was just overwhelming. So, and I don't care about any quote-unquote business partnerships or anything, and I get a lot of offers for those too. People wanting to me to promote their software or stuff like that. I don't have time for that. I trade, and I do well trading, so I don't need that. But maybe at some point in the future, if I want to trade a lot less, then I'll do something like that. But right now, it's just trading is good. Anyway, let's see. Before I get all sidetracked here, let's look at the daily. So down here, this orange line is RSI. It's RSI 14. That's this dark, thick orange line. The other lines with the slow and fast moving averages is stochastic. So you got the short and slow. So good for showing momentum, I guess, over sold and overbought condition. These lines are at I believe 90. Yeah, there you go, 90 and 90. All right, so generally dip below. Often you see some sort of short-term bounce, right? You can see it here, right? It went further, but it still bounced. Again, this is daily time frame, so keep that in mind. Look, I still have the crap settlement on there. Still says 41.37. What is going on there? Maybe I did that video. Maybe I did that video wrong, because this should show settlement. Well, maybe it's going to show it Sunday night when the bar. Yeah, so it hasn't showed the closed bar yet, so it's not even showing it yet because the market wasn't open. Yeah, Friday night. So this settlement will show up on Sunday night correctly. See? This is why you don't use the old school settlement way. Although, maybe there's a way to do it, and I just don't know. But I will tell you that I helped somebody a few years ago about this whole settlement thing on the Sierra Chart support board, and the Sierra Chart Engineering took my text verbatim where I helped the person for settlement and added it to the daily OHLC notes about settlement and how to add it. And they didn't put it in context, which is why their note down there looks a little funny. They like spliced it right out of my response to somebody and then just put it in there kind of sloppily. So the grammar's bad. Just letting you guys know. Oh, jeez. These guys. If I would have known they were going to copy and paste it, maybe I would have put better grammar in my response. Okay, so anyway, that's what that is. It's just volume, some moving averages. Obviously below the 200, right? Everything's starting to curl down. Right? All these moving averages were all separated, kind of moving up. I mean, it's kind of the same thing. We don't really get to see a whole lot more. We did close below, so the next day or two is going to be really important. If we come back up in here, we're going to range out some more probably, and maybe even go to the other side. Okay. Keep in mind, we have a lot of gaps in the market from higher, and I'll show that on the 30-minute candlestick chart. So there's that, and I think the more likely scenario is to go take a look at and visit this extreme LVN area. So keep in mind, this volume profile is just like the weekly one. It shows visible bars only, which is why it doesn't show anything right here. I like that because it gives me fine control over the volume profile and what I'm looking at. So it's useful. Okay. So there you go. So that's that extreme LVN there. Look at that ledge. I mean, just poof, really crazy. What a crazy move right there. And then came back to the LVN, just bounced right off it and up. So that's that. On the weekly time frame, you don't really get to see where the weekly candlestick structure, how it was like that was the open of that red bar, and then we came back, held it, which was actually supportive structure on the daily right in here. And now we can actually see that a lot of volume was actually put in right here. See that? On the weekly down here? Lots of volume was put in here. A little bit like a higher volume spike, and then low volume up here, but this is all relatively very high volume. So it was actually put in on the last weekly candle. So now we know the answer to that earlier question. Adrian says, the 4120 bite, did you exit or are you holding? So I try not to tell people what I'm doing specifically on swing trades, because then people just start asking me these questions nonstop on Twitter. But that was a day trade, my friend. That was a day trade. short time frame. I bought this area on NASDAQ and I sold half right up here, and I stopped out at break even. So it was not even a 0.7R trade on my swing NASDAQ trade. And someone was asking me on Twitter, like, why wouldn't you hold it for a big move? I'm like, because I don't know the future. If I get a good entry like here on the NASDAQ, I always take profit into new highs. I just always do, especially if it's 1R. So it's just how I structure my trades. So my stop was 1R, or less than 1R, but because of where I stopped out, it wasn't even a 1R trade. But anyway, I stopped out of that QQQ trade, which that sucked, but wish I would have sold it all up in the top of the range. But that is just the way the cookie crumbles when you let a position go. So whatever. I bought some in here too. You guys all saw me on Twitter. I told everybody where I bought. Someone was asking me, who is it that asks me all the time on Twitter, what are you doing? Oh, always asking me questions. I can't remember his name. But anyway, maybe it's you, Jonathan. I don't know. Probably not. Oh, who is it? Some guy with the Kim Jong-un picture, I think, and then Trump, maybe, in his profile picture. I don't know. It doesn't matter. Something Jack and Golf, maybe? Jack and Golf. I don't remember. I like him. He's whatever. Harmless. Doesn't bother me. Could ask me all day long. I like questions. So if you start asking questions you look at some of my threads on Twitter, they get pretty long because I love to talk to people about the markets and get their ideas. So anyway, daily, not much to write home about, but it is interesting that the volume node was developed here in sort of the last week, and so it'll be the most reactive. Imagine if the volume node, the majority of it, developed here. Okay, so a lot of it did. There's some really high volume spikes in here, right? But that happens a little lower down in here. But imagine if this development, we see the volume, didn't happen here and it happened back here. What would mean is that we came lower, we rotated up, likely stopped a lot of shorts out, came back, and then so the rotation is different. It's not occurring at the end, and we haven't come back to test this area yet where shorts were wrong. So I like it even more for a bounce. So this is a good thing to see this. So at least it answers that. All right, so there's the daily. Do we have any levels that we want to get rid of? So anything blue and red come from my TPO charts. Anything green, there, let's see. Mainly, they come from my TPO charts. If it comes from the daily, I'll note it. Taking my sweet time. Hey, I'm an hour and 20 minutes onto the treadmill. Good. All right. So I have nothing to get. I thought I got rid of all my daily references in the afternoon on Friday, but wasn't 100%. All right. So let's shrink this chart up. Where does it go? Right up here. Shoop. Wouldn't it be nice if Sierra Chart could remember this segment here? You know, this is part of one big chart book space. So you think you're seeing the three here. If I like equally make boxes out of this, it'll mess up all the charts to the right of all this. So can't do that, but it would be nice if Sierra Chart could remember these custom layouts, and then you can just sort of snap things back to these positions and have it all equally sort of kind of like Thinkorswim, and then like adjust the whole screen and then everything shrinks. That would be so nice. like all these get smaller as the whole whole chartbook space is adjusted, and so they all just scale. But the limitations. Okay. And we have a new DeMarc count down here. So that's something to consider, new DeMarc countdown. If you follow, is it Tommy Thornton on Twitter? Hedge fund telemetry. He uses DeMarcs a lot. He's got a DeMarc on the MAGA index, Microsoft, Amazon, Google, Apple, I believe. And he does DeMarc on those, and it tends to give a nice signal. So that's in breakout mode right now. So those likely project a little bit down as well. Oh, Kylie Porter asks, how'd you get the COT reports? I think I got distracted. So you can just go type in COT reports or COT report Sierra chart support board. Type that into Google. You'll find the threads that you need. If you get the wrong thread, it'll point to the right thread, and then the code is in there. You'll have to compile it. So then write this down. You'll have to look up Sierra chart, how to compile a custom study. It'll take you to like a 6 or 7 or 8 step little guide, and then you just take that code in. So step by step. It's actually fairly easy. Take you a little bit of time, and then you do that, and then you got to sign up for it's all in there in the thread, so just read through the thread. But you got to sign up for the data, get it through an API. It's free. It's now used to be Quandl, and now it's NASDAQ data something. But if you go to Quandl, Quandl, no E, Quandl.com, it'll redirect you to NASDAQ. And you got to sign up for the API and all of that to get your API key, and then you use that API key in the study, and then it brings it all in. But it's all in that thread on the Sierra chart support board. So unfortunately, not just a compiled study. That's you can just sort of use. Maybe someone has done it out there, not I. So unfortunately, that's what we got. Somebody was kind enough though to code that whole thing up and give everybody the source codes, which is amazing. There's such generous, proficient coders out there, which is super cool. So there's the daily. Let's go look at the 30-minute now. Making it big for you guys. Usually I do these all on. See, this takes much longer. Usually I do this on all these small screens, and I just go in real quick. But this will help you guys. Yeah, Kylie, just read through the thread. And just do all that stuff. Unfortunately, it took me a while too, because I'm not a coder or anything, so I couldn't even remember. I probably did it 2 years ago, so I don't remember all the steps or anything. That was one of the few custom codes that I actually compiled. I really wanted it. Spent a bunch of time on it, looked at all the fields, and then went over to the CFTC, downloaded all the reports, compared all the data to figure out what I was looking at and what, if all of the data lined up, it does, and which fields I wanted for what. And so that COT report that this guy's done, you can use it for kind of everything. You can use it for copper, like any of the commodities, oil, to look at long and short traders, big traders, small. I mean, there's all kinds of stuff that you can use this report for that'll help you for commodities trading if you're interested in all that. I don't use it for the commodities. I used to. But lately my focus has just been technical setups on oil, quick scalps, And that's about it. I do follow some news on oil, but not a lot. It's not super in depth. I wouldn't consider myself a professional oil trader. I just play some of the technicals, and I'll scalp it here and there. Same with bonds and stuff like that. You know, I'll get in there and scalp some moves, but I'm not in it every day. I do watch it every day, just on the quote board, see what it's doing, pay attention to some news here and there, but that's about it. So anyway, let's see. So this is the 30-minute. So now we have, see how this gap filled here? That was also settlement. So this is incorrect settlement here, this line. Again, it won't correct until Sunday night. That new daily candle opens. Then you could see why I went long here, right? Below the trend line. So this was all coming in. Then I just saw the capitulation. So knowing this was the daily trend line was super useful, because I just looked over at my 30-minute, was looking at my footprint. It's on my footprint. Boom! I knew exactly where we were coming into, because all these are overlaying onto my charts. So anyway, we've got a gap here in the market. Now this is an RTH only chart, so this is not a humongous gap. Let's see. I mainly use this chart for short-term channels and trend lines, stuff like that. That's all. I'll put, so like for this example here, I put a trend line from here. So here's what I did, just to help you guys a little bit here. I did this during the week, this, and sorry, that's not what I did. This, this, and about this is what I did. And when we broke below here and regained it, I was looking for that bounce. So it is pretty useful. You can see that this channel will hold for a little bit, and we trapped all the bulls up here. And this is where I took profit. I took some here, and I took a little more here, and then I got stopped out on the NASDAQ. But anyway, a lot of these trend lines were similar. So if you put a trend line up here, like this, all right? You see that? Gapped above, caught everybody, and then whoosh. Put some volume in up here, a little bit of volume, in just what, a few 30-minute bars. That's a lot of volume for an hour, 45 minutes, whatever it was. That is a lot of volume. I know. March 17. Yep. Right here. Whew. Filled that gap and whoosh. So this area is when everybody started talking about breath thrusts, right? Everybody just got super bullish. I was bullish. I was bullish already before. But yeah, and everybody just went kind of honky to the long side, and I had a bias towards the bullish side, so I was buying pullbacks in here on NASDAQ and selling these little rips on the NASDAQ that we had. Anyway, whatever. I digress. So anyway, we have a little gap here. This is not, for me, going to be relevant, this one. It's not humongous. This one, you see this gap here? That is relevant, because we closed here and then we gapped quite a bit. Well, we gapped 20 points lower. It's relevant enough. You see this gap? We came right up to it. I consider that already closed. So guess what? I'm going to go in and erase it. Now, if we get over this trend line in the future, yeah, we'll probably rip up. But look, big old gap up here. How big is it? That's the question, right? Just a little bit. So we got gaps here. We got this one kind of already filled. So we just have a gap at all-time highs. not humongous. This one not too relevant. This one pretty relevant. So I am going to put something on the chart for that. And then what is the date? 4/28? Okay, so just put it in. Shoom. Where's the gap? Right there. All right, so we'll call it 4/28 gap. That's it. Put it in. Keep it in mind. Okay, let's take off all these stupid trend lines that I've been adding to talk about the past and how I put them in here. This is again an RTH only chart. All right. So right now, just thinking about this for a second, the short-term trend, if we can establish that, is a channel. And it's channeling from this point, and it's channeling down like this. And so where you would establish this is this lowest point and then extend it back up. Well, okay, let's do this. Now let's extend. Now, look, if you extend the drawing, kind of matches in here. So these can be pretty dang useful, especially because a lot of people don't know exactly how to define a channel early on. They just don't, and so it can be really useful. So here we are, some sort of retest of this area here is probably in order, like that. So this is all, again, this is all RTH. So this is the swing low that we've already taken out. We've got lows down here for RTH, so 4,100. So do I want to mark this up? Yes, because what's going to be under 4,100? Stops. Okay, so we're going to make this red, and we're going to say like that. We'll right-click this and modify text and say, hold on, and say hold on. So that's from 224. Modify text, so we'll say 224. So swing low, stops below. Now, that gives me the idea that as we get to this area, we will probably come here and maybe even below the low, somewhere in here, bounce. And then when we come down again towards it, just depends how much momentum there is in the market. And if let's say there's a consolidation here in the market next week, and then we start to break, we'll break those lows. But once we break those lows, they're gonna be stops. And so I will be looking again for the same thing I talked about earlier, some capitulation, stall, and then start to reverse. But I will be looking to get out on the intraday trade. So let's say it reverses here at 40.60. I'll be looking to get in 40.65, 40.70, depending on what's below in the footprint. I will be looking to get out before this swing low, somewhere here. So if I can structure a 2-hour trade in this zone and take 40.65 to 40, what is this? Let me turn this off, get rid of all this, and get out into 40.85, I will. And that'll be my trade. And then I'll wait. If we come back through, punch up into end of month settlement, which is stupidly high volume, I'll show you that. Let me switch screens here. Lower 49. Okay. So this was T+1. You see how it's the settlement volume is maxed out. 116,165 contracts in the last 30 seconds of trade on Friday. Again, this is end of month. That It's a little high for end of month, but within the normal range. So this usually maxes out end of month, the last day. But it's relevant because there's huge positioning end of month, right? Some de-risking, some new positions. Doesn't matter. Lots of volume. So that settlement, which is 41.2750, right here, is going to be relevant. And I'm going to wait to see how the market reacts on that settlement. If we get a ton of capitulation volume here, and the market is cruising, and we've gone straight up to that level, I might look to just, while every newbie in the world's like, ah, breakout, reversal, fade it, go long, because there's such momentum in the market, I will step right in front at settlement, likely, because they won't know what's about to hit them, which is that end of month settlement. I could put tight risk, and if I'm wrong, oh well. But most of the time, most of the masses aren't thinking about that. They're just thinking, oh, big movement. I want to catch it. FOMO, go long, go long. So if we get a 40 or 50 point move back to that zone, guess who's shorting? Moa. And I will wait for a footprint setup. I'll wait for a low time frame setup. I will wait for a setup on 1,000 volume chart where there's lots of consolidation, some structure, blah, 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 blah. If we haven't pulled back before that, guess who's going to step in front of the market and count on at least a consolidation that I can scalp short? Me. That's how I trade. Because that's not how most people view these types of things. And it works way more than 60 or 70% of the time. Now, that probability of winning, for my case, is much higher than that, because I don't just take that setup blindly on the higher time frame. I will look at all the little pieces on the low time frame, and I put them together. But anyway, I digress. I got a text here. Alright. Whatever. Block that person. I don't know who they are. Okay. So that's a potential setup. But anyway, this channel right now, go look back now. Since I'm talking to you guys a little bit about channels, now go look back at, and okay, here's a question. You're like, why wouldn't you start a channel from way over here? Because that's not what's happening. Right now we have this major impulse, consolidation, major impulse. This was a sideways channel. It was a bull flag. We false broke and rejected. This is the new trend, and its rate of change is dependent on this move, counter trend move, larger impulse, bear flag, larger impulse, right? So you can even see, like let's say you just put a measurement tool on it, right? You go here to, I don't know, here. How many points is that? Whoa, it's a little, 280, negative 286. So measure and move here to here, bull flag. Boom, we come down here. What's that move? 314, right? What's the angle? 88.18, 88.9. So it puts us, okay, let's just for the sake of perfection, let's match the angle. Like, what madness are you using? 88.51. Let's see. Oh, come on. Right here. All right. That takes us 319 points. So you see it's roughly 300 points. Consolidation, another move. Boom. See how it's around the channel low? Markets do have some symmetry sometimes, okay? So these are useful things. So if you're here, right, and the market's looking like capitulation, huge volume, right? Are you thinking, I'm going to take a short for 30 points here? probably not a good idea. I'm just saying. Thinking in terms of probabilities and this channel that most other people aren't going to be drawing, you have a leg up. You get an idea in this area. If you're short from over here, you want to be covering into here and looking for longs potentially intraday. And then you want to use context to figure out should you be going long or not. Easy peasy lemon squeezy. So you see how I think about it is not in terms of I don't have a plan. No, I have all these potential plans for how price may move. And I use the context of the market to kind of give me an idea as to what direction I need to be thinking about in this zone. Now, intraday, could there be some consolidation here and we're breaking out of balance and then the measured move is down here? Sure. But again, this is just going to give you a little bit of a picture. That's it. That is it. So anyway, I will keep this on the charts. It's now overlaid to my footprint. It's overlaid to my 5-minute chart. You're not seeing the chart with the chat. Oh, God! Maybe I should look at the chat. I suck. Sorry, guys. I really apologize. I got to put my measure. I took all my measured move stuff off to clean it up. Anyway, this is the angle I was talking about. Measured move here to this channel, about 300 points, negative 294. Angle 88.49. Here, do the same thing, down to the channel, 88 point. Again, it depends how you do this. 88.66, a little bit more. 275 points. So roughly 300 points for measured move takes you to the bottom of the channel. The channel is defined as not from, let's see, people have questions, so I'm just going back and kind of repeating some of what I said. People like to go, hey, isn't this a channel? Why don't you incorporate all this stuff up here as part of this channel? Because it's not. This was how the market was moving. Sort of like this. In this bull flag, we broke out of it. So it was just nice pullbacks. And then whoosh, broke out. Everybody got bullish. Then we failed. Now this is the new trend. That's what I'm trying to get at here. And when you take the channel and define it from here to this edge, and then you define it to this lower edge where we bounced, it lines up with this price move here. So all you have to do is define this point, and this point, and then the channel extends out, right? And so now you can project it down here. Now, think about it. What's happening here? It's 1, 2, potential rot. So if we break the channel, we may get a failed rot, and then boom, right back up. So with what I was talking about earlier, you really want to have an idea of the potential for these kinds of things in the market. And now you have 1, 2, and then a potential to buy this for that kind of upside move. And then you got 1, 2, 3, rot, rule of 3. You get a complex retracement off this zone. You trap all people below these lows. That's one scenario, right? So that's what I was kind of talking to, and sorry for really jacking that up. But Jonathan's trying to picture it in his head. God, you guys make this so much better that you're commenting and stuff, because otherwise I'd be like, I'm getting offline because nobody's saying anything, and I'm bored. And I do this way faster, and I don't have to talk about all this because I'm so much slower when I talk. And then I get questions, and I go down all these little rambles and stuff like that, but that's okay. All right, so I'm going to leave the green channel in, and the green channel is green for the fact that as we make impulse after impulse down, I'm going to be thinking about buying. If this was an uptrend, I would make the channel red, because at some point I'm going to think about doing the opposite thing when it gets extended. Like, what? That is so messed up. No, it's a bearish market. But because of all the other things I talked about, sentiment, time, seasonality, a bunch of other things that I talked about earlier, I will be thinking about buying through here. But again, look, we got all these, oh shoot, where are the zones? Huh? This isn't overlaying the weekly? Did I really jack that up? I think I did. All right, what's that weekly chart number? 41? Let's go see. So if you guys don't know how to reference charts, you're going to figure it out right now. You're going to know. So go to chart drawings. Love these new settings windows, how they're all organized up here. You can find stuff quicker. These are hooks to hang on your memory tree. That's what it is. Think of it that way. Anyway, so 17, 34, 36, 41 is the weekly. Man, I can't believe I did that. The weekly. All right, there you go. Hey, there it is. I took it off, probably because I had too many lines. Yeah, that's what it was. Anyway, so there you go. Hey, happens to go right into the LVN. So what we were talking about on the weekly, that may just boom reject real quick and then test this bottom area. And remember I talked about a little bit earlier when I didn't have it up and you were all imagining this chart. I'd be looking for some sort of trade back to the upside to test this and look for some 2 or 3R trade. It's got to be set up on the footprint. Capitulation into this zone. Could be right above the LVN, and if it's on the channel, it's right here. If only things moved in such perfect lines. But how many people have this channel up? I guarantee you not a lot, because most people don't try to predict the channels ahead of time. They wait for like three edges to form, right? Most of the time they do. So after this bounce, they'll be like, oh, it's in a channel. And then it'll break the channel. Because, again, rule of 3. Once you see a pattern of 3 or see 3 things, you're like, ah, it's a pattern. Everybody recognizes it. So train yourself to try to recognize the patterns ahead of time. You're like, well, how the heck can I recognize a pattern ahead of time? By things like this, how I've shown you how to draw these channels. This can be really beneficial to your trading. Yeah, Emmanuel, that to me is not a huge deal, but I do get that some people like to switch those settings for trading. So, Sierra Chart, and I think it's Verillo Trading, put out a video on the YouTube channel. You guys should subscribe to it. It's a good channel for learning about Sierra Chart. They put out like Trading in Sierra Chart, I think is the video is called. And that's a good video, and it kind of tells you how to use some of the scale in, scale out functions and some of the other functions using the new chart settings, or the new settings window for trades, general trading window, and how you can change those settings as you're trading. So that could be useful with the new settings windows if you utilize things that way. Again, mine's all static, and I have shortcut keys and all that other jazz to do what I want it to do. So I don't need to go back and forth on that. But for some of you, it could be really useful. All right. So let's see here. How long is this video already? Hour and 30 minutes. Not too bad. Yeah, it's not Verillo Trading. It's Sierra Chart. I mean, the channel, I believe, is just called Sierra Chart. But I think a guy from Verillo Trading does the videos, if I'm not mistaken. And so he probably partnered with Sierra Chart. So I think it's their official channel. It appears to be their official channel. I mean, I don't know. I don't know the details on it, but I suggest you guys subscribe, because certainly seems a little bit like it's sanctioned by Sierra Chart, so go for it. And the guy knows his stuff, so all good. Go for it. By the way, there's another guy. His name is Frozen Tundra Trader. Follow that dude on YouTube. And if you're into Sierra Chart, so he's a coder. He has put some custom codes out. He's put the code out there for some custom stuff in Sierra Chart, and you can compile all of that. But give him a follow. He's only got like less than 200 people subscribed, and he's got some awesome stuff. I mean, awesome stuff. Cool. Yeah, you're probably in Fat Cat server because I watched one of his videos and he says he's there. So, great. Frozen Tundra Trader. Here, I'll type it in the chat. The chat. Frozen Tundra Trader. Chink. Look at me plugging other people's channels. Okay. Yeah, I mean, this guy, I watched some of his videos. I mean, he's not a full-time trader or anything, but he trades equities, and he's got some cool stuff that he uses and combines. So, for example, when he clicks on one of his other executing programs, it changes the Sierra Chart symbol at the same time. So maybe some AH key action, auto hotkey, I don't know. Maybe some other fancy stuff that I'm not a coder. I don't know, but it's cool. I dig it. It's tech. So anyway, he works, according to his bio or about him or whatever, he works an hour a day for his real job. And he's got a family and kids and all that. So I dig it, man. I'm rooting for the dude. I hope he becomes an FT trader, full-time trader. So no hate from me. I will plug any good YouTube channel. I don't really care. So here we are in the 30. So we'll leave this here. I don't know. This is enough here, right? We have this gap up here, way up here, right? You see that? So that one's relevant. Didn't go too close. Let's see. This one here, how big is the gap? It's huge. Look at that. This gap goes from up here to down here. Cray cray. All right. Hashish dal beta or beta. Hello. I'm reading all the comments. Sorry. Easily distracted. Oh, yeah. Well, that's cool. Right on. The less people that actually follow a lot of these things, probably the better for all of us, but that's okay. I'll adapt. If a whole bunch of people start growing, learning, using a lot of these strategies without any thought, it'll just mean weak money in positions that I think I'll be able to spot, and I'll see that the patterns are changing, and I'll adapt. So I have no problem sharing what's working for me now. But I think a lot of this stuff will work forever because it's just based on volume, and it's based on the idea of trap traders and playing against the weak money, and that's worked forever. So I haven't really had to adapt my system very much, and I have such a tiny YouTube following. It doesn't go that far. Awesome, Panama. MacBook Pro 2015. You know what? I use Linux. So all this stuff you're seeing is based on Linux and using Wine to run Sierra Chart. And my performance is about 200% better. How the heck is that possible? I don't know. Windows sucks for me. This is just, it works so much better. But and then I can customize all the colors, and I don't know. It's just a much nicer setup for me. So that's how I get everything looking the way it does, with like this highlighting at the top here, blue, right? If I unselect it, it's not highlighted, so I know that this is the active window or focused window. So anyway, I digress. Let's get out of this 30-minute chart. I'm going to end up adding more to this 30-minute chart because of all of these. So you see these consolidations here, right? This fake out, all this stuff. I'm going to end up adding levels, but I'm taking too long. I'm an hour and a half in, and now my info goes far. Okay, cool. Right on. I'm happy to provide it. I'm going to end up adding, for all these little consolidative zones, I'm going to end up adding stuff here. But like you can see, it says like 420 concentrated HVN zone above squeezes shorts. So this was a prior concentrated. This is now, what is it? 420. This'll change from 420 concentrated HVN zone above squeezes shorts to longs trapped here. So when we come back up, longs are going to be trapped. There's going to be some sections here, but I just can't do it quickly while I talk. So I'll end up having to put all these zones in, remove some, and then I'll come back to this chart. So for now, let's see. Let me keep my 30-minute up, and I'll switch over to my TPO. That's what I'll do. All right, so let's get rid of this. Right 27, full screen. Fortunately, this screen that you're seeing now is oriented vertically, so this is the view you get. My screen is literally, it's a curved screen going straight up. So this is the view you get. So let's do this. Let's look at our footprint chart, and I'm gonna ignore. See this ETS, my latest video. Show you guys how to create the ETH zones and the USA2, Asia, which isn't really Asia. Asia starts later, 2 hours later to be exact, but for all intents and purposes it works. Anyway, you can watch that video I explained there. So, and then Asia, blah, 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 and then all this information down here. So I'm going to get rid of all this because I use the RTH to put my major zones in. It's just how I do it. And then every night I'll look at, or morning, I will look at, depends when I have time. I'll look at the evening sessions and break them apart from the night before. But I won't use prior nights typically to put zones in. They're just not super reactive. So this is now all RTH. So, and as you can see, it says RTH up here, right? So if you do how I do those videos, you'll know it's kind of easy. See, and then this is no longer dark, so you know it's not evening and full session. So, but I put that RTH ETH in there for ease of viewing, right? So we know that we're only looking at the RTHs, because dum-dums like me, when I'm looking fast, sometimes I mess them up. Okay, so let's take a look here. Put this right side fill space out a little bit. Take a look. See, these dotted blue lines are singles. All right, so 426 top of singles, no longer relevant. Erase drawing, so that's coming off all these other charts. The 30-minute chart, the 5-minute, the footprints, the volume. It's cleaning it up. 422 low, that's coming off now. This weekly 0.5 to 618 fib zone, which is where a lot of people originally bought right above for the bounce, I'm leaving it in because they all when we lost that zone, look at all the thin volume here. Look at that extension. A lot of retail traders. You're like, what? Retail on the dip? Yes. Short-term money. Swing traders. Not the really big long-term institutional money. That's how I think about it. All right? Just whoosh, big extension. Capitulate on that day. So I had that on my charts. And so as we were hurtling through this space, I was thinking to myself exactly that. Oh, everybody's stopping today. They're just giving up. So they capitulated all the way back through the zone. Pretty awesome. I don't know how I made it out of this day profitable. I did. And I was counter trend scalping on this other side of it. And just footprint trading. But it wasn't very profitable. It's just above like 1.2 profit factor, so it wasn't very good. So had the right idea of it coming through here. Took some shorts, but then I started to think long down here. And just kept thinking long because of my overall thesis about movement through that area. And, you know, that happens. Sometimes you just don't go with trend for the whole day. You know, moves like this where you open here and close down here. Those are not every day. So it happens. I'm sure there's 1,000 Furus that sold up here and bought down here. Good for you. Bet you didn't call it in real time and tell everybody where you were taking your trades. Probably all after the fact crap. But anyway, I digress. Panama, I've never watched, I haven't watched all of Axia's content. I watched probably in total 6 or 7 or 8 videos, and what I saw I liked. But there's this guy Brannigan, I think. I looked him up last night, Barrett, and he has like a introduction to footprint. It's like 4, I couldn't get through it because I knew more than what he was talking about. I'm sure I would have learned stuff, but I was in video 1 and I was like, boy, this is great for the beginner, but I am a studious person and I've learned all of this and I have my own system and methodology that works. So, but I think it's good. And I know traders who've taken the courses and they speak very highly of it, and they've been exposed to me on a daily basis, and they've been exposed to Axia. And they say, like, a lot of the stuff you teach is very different from them. In other words, I like to think about the market from the perspective of trap traders and what would big money need to do to play against weaker money. So I think that way. And so my approach is just, my framing of the market, the way I approach it is different. So I don't know if I sort of teach something very similar, and just my framing of it, sort of the colored lens I put on my eyes to look at it is just different, but it's the same content. It likely is, because a lot of this is aggression, volume, you know, market behavior, DOM, tape reading, size, right? Getting above. Trap traders that were absorbed, right? Icebergs, all of this kind of thing. It's a lot of it is the same. It's just how you use it with other. For me, it's how you use it with other things. I think you could make a career out of just footprint, but I think charting larger levels and having an idea of the major context of the market, including news and context and sentiment, is just a much better way to do it. But I understand that a lot of people say that's too much information and it's overwhelming. So you got to start somewhere. So if you want to just learn footprint and all these setups, great. If you're unaware of the larger time frames and sort of a lot of the things that I'm preaching here, then I think you're going to struggle with the footprint at times. You're going to be like, man, this trade just didn't work and I don't know why. It's like it's the perfect setup. And you won't have any reason why it's not working, right? And sometimes that's just the case in the market, but if you do this much homework, you're not surprised by much. And if you are, there's usually an outside catalyst that insiders are selling on, and it becomes clear later why a level didn't hold. Regardless, you play with stops, but so that, I mean, that's at least my perspective on all of it. Yeah, hashish. It's very, very important. I agree with you. Weekend sucks. You're gonna gamble on crypto to pass the time. I don't really trade crypto. I just I invest in my family. But again, I'm 2 hours into the treadmill, so I'm super happy that I'm gonna go outside, make some lunch for the fam here pretty soon. But anyway, onto the TPO. And the TPO is on the right side of a very large amount of monitors. So 249 inches in front of me. And then I got a vertical monitor on my left, vertical monitor on my right. And so you guys are on my left, and I'm now turned all the way right. I won't see the chat for a bit. So I'm just, if I miss stuff, apologies. I've got to focus a little bit on this. So 422 naked TPOC and rejection capitulation area into 422 close. You can see this, right? The shading of the TPO is the rejection came off this TPOC area, which was not the TPOC. Well, yeah, I guess it was at that time during the day. Anyway, it was also intraday volume point of control right there. No, it's actually right here. Sorry. What is that? Oh, that's the 50%. Just looks slightly orange, but that's the volume point of control. This is the 50% of initial balance. That's what that is. That little pinkish looking thing. That's 100% right here. Anyway, so that's the breakdown. That's good. That was already important. We couldn't even get there on the rally. So that was that. If you guys remember on 422, big breakdown. That's that break of the fibs. So the fib zone of 618 to 0.5 for this whole move up off the swing lows is, you see we came back to that zone. A bunch of trap traders through here. A lot of them capitulated. There's always some that are left. Look at the volume node. Big. Some capitulation. And some impetus to sell it, probably with bigger money, even positioning here. And then look, these volume profiles compare volume to visible volume profile. So in other words, the width of this volume profile is relative to everything you see on the screen. Important setting. So you can see less volume, big volume, but much bigger volume. Ooh, much bigger volume in here in width relative to even all this, right? So this is breakout zone. Breakout, cover, cover, some buyers too, dumb money. Again, how many fib traders are out there that love to buy this stuff? Look, you can even see big buyers, big covering, right? Maybe buyers in this right in the middle of the golden zone. Naked VPOC, so untouched is this orange. Naked TPOC, time point of control. And look, it's not institutional buying above there. They just went down, filled volume in right below it, trapped a whole bunch of people. So anyway, we've come up, tested this. If we come up again off some distribution and we get above this area, I would expect, because we've tested this already, that we may have a little reaction here again initially, but then if we come up again to it, we'll probably take out all the short stops. But this whole area will be here, 44.37, it will be resistance. Mark my words. So I'm going to leave that. What the heck is this right here? $421 HVN doesn't even make sense. 421. There we go. Does not make sense at all. Yeah, we're going to get rid of that. Oh, that was this one anyway. All right. 417. This is, again, the red is all from weekly. Just looking at this, looking for structure and where we've tested and where we have not tested. So because we had on the daily TPO, we had a section here where we came and consolidated here. A lot of this garbage from here, all these volume nodes, and I'm going to look at it on the weekly. and determine my levels based on the weekly. So that's why I'm not marking anything from here. So anyway, here's the close. Here's the volume pointed control right down here, 41.30. So where was settlement? 41.2750. Let's see, 41.2750. Yeah, so very close to that. There were a whole bunch of ask icebergs right up into this 41.40, 41.35 area. Go look on your footprint, you'll see it. So I'm thinking about that. This is a high volume node and breakout zone. So short term, this is the last rotation. So if we come back up, the last rotation starts in here. So you want to mark that up because that's the very last one. That'll be relevant Monday, Sunday. If we get up there, it will be relevant. Now Sunday night, keep in mind they play some hanky-panky. So it'll be more relevant possibly Monday. But just know you get the weekend news cycle. Sometimes they rip it on Sunday because it's lower volume, less players playing. They can run stops. So if we come into this area, come in here, find all the stops on super high volume into this area, and then reject, you might think of getting short. Right? Because that's the day. If it happens on Sunday, you got to keep in mind the context. What day of the week is it? What do they like to do in a thin market? All these things, right? So think about these. It's not just, oh, there's a volume node, I'm getting short. No. Is it in after hours? Is there a news cycle driving it? Like, you got to kind of be aware of these things. Otherwise, you're going to be a trader that takes all these trades and maybe you win 60% of the time. Maybe you win 40% of the time. And now you have to increase your risk reward. And now then your probabilities of winning go down even more, right? Because you're taking a bigger win and some sort of stop. So you have more of a range that the range needs to move more in your favor. The probability of that is lower. It's just like options, right? Same thing. Okay, so let's mark it up. Boy, I can get distracted. Still not looking at the chat because it's way over there. My neck is craned to the right. I don't want to fall off this treadmill. So anyway, we're going to say, what is this, 429? And modify text. 429 HVN. So I already know, because it's blue, that it's from this blue TPO chart. So I don't have to put like daily HVN or anything like that. So that's where having a system of colors for your charts helps a lot in your notations. So it just tells me the day that it's from, right? And then it's an extending zone from there. Anyway, I'm just looking at this TPOC here. It's 50% of this extension. Is there a high volume node? No. Is there another one here? Yes. Thinking about this group of high volume nodes and then the singles above here. So let's say we rally, we reject here, then we start to move back up. Singles. Is it a big set of singles? No. But it is a big rejection and sell from up here? Yes. So I will be noting those singles. So I'm going to be noting a very small little edge here. Alright. Put this ray on here. Or horizontal price. Whatever ray. Right there. Boop. Right click it. We're going to call it upper singles. Nope, sorry. 429 upper singles. Why do we call it upper singles? Because there's singles here and here, right? So we'll put the singles up here. Just thinking about this here. We can get rid of this zone too. This goes further back. do is all right. Let's see if the viewership is falling off here as I don't talk. Then I'll just cut the feed. But let's see. Look back at the chat. Okay, just to make sure you guys are. Some people are still here. 429. Singles. Oops. Lower singles zone. Right. In other words, it was aggressive selling and LVN from there. So I always associate with the singles, typically LVNs anyway. So that's why I'm not going to put LVN on the chart here. Right? Like this is an LVN, but I already know that I'm going to be looking at the HVN. Right? The LVN will probably fill in because that's what markets do. They rotate and they fill in, and then as we get into the LVN, you get a little reaction, but you typically go back and just fill in the zone. What I'm looking for is to scalp, counter direction scalp, or take profit if I'm long into the HVN, or just before the HVN. If it keeps going, I'm like, well, not good risk reward because I'm coming up into an HVN. Maybe the market has made 3 big impulses for the day. We've had consolidations that are extending out. We're losing momentum. I'm not thinking about the long side now. I'm thinking, all right, maybe I'll look for a counter trend scalp here. Right? That's how I play it. So anyway. So 426 HVN, we already passed through that. So get rid of that. A lot of this, see this? HVN 4.5. Did we get there? Weekly LVN zone. So that one's in white, by the way. So I lied. They're not all, but it should be. Let's see. All right. Let's see if I can select it without getting the. No, I'm going to get the wrong one every time. Come on. Ah. Come on. Nope. Let's see. Let's just move this down. And then go select that one. All right. Red. Okay, now we know it's from the weekly. Then the singles are right from here. Tedium, isn't it? Somewhere in here. That's okay. We'll get it close. I just want to look at some of this structure real quick. And also make sure none of my lines are emanating from this prior week back in here, if they haven't been touched. See how these zones become resistance ahead of time? See that? Kind of cool. When you do all this, you get really prepared for the next week. Let's see. Really does help. There's that golden fib zone. There's another zone here. And what's interesting is that, so when we broke this low, all very low volume until we got here. And then there were buyers on the naked time point of control. So what do you think? Do you think those buyers have all capitulated? A lot of volume down here. But a lot of people average in. This is what we know. People don't like to admit they're wrong, myself included, by nature. But in this market, or in trading, I love to admit when I'm wrong quickly, because I've learned that's how you make money over the long term. Is you cut your losers and you admit you're wrong and you move on, and you don't have any emotional baggage. You just say, I'm wrong. It happens. This is part of trading. But anyway, we're thinking about others who maybe have poor habits. Okay, so modify text. Let's go. 422. Prior NTPOC, where buyers got long. Trapped on first touch. So in other words, for your guys' sake, put a parenthesis in here, HVN, now. So does that make sense? Of course it does. So we'll leave that in until I shorten it up for myself later. And then everybody who watched this video will be like, oh, now, when you see my chart middle of the week, and we're here or something for whatever, maybe we're not going to be here, I don't know. And it's all short, and you're like, oh, I remember what that really was. Oh, I could see where the shortened version of that makes sense. Again, I'm not trying to encourage you guys to follow trade me or play off these levels blindly, but I'm trying to educate. So here we go. Nodes. I think we're good. A lot of this stuff is just higher time frame stuff. I'm going to play the price action according to the daily charts. This is a naked volume point of control. Here's the close for this. So this close is going to hold high volume. Now what day was that? 428? Let me go look at my handy dandy 428 T+2. Settlement volume 41,095. It's a middle of the road. So that'll be important too. Think. So T+2 will not be up on any of my charts automatically because I only look at T+2. So I need to mark it. So there's the logic. So that settlement is 42.8350. So is it here? No, it's just below. Settlement is not the close. It's the VWAP of the last 30 seconds of the RTH session. So there it is. Boom. So we're going to modify it and say for 28. We'll call it settle. No. High vol settle. Okay. And then this is, you'll see, 428 N naked volume point of control. And N VPOC, naked VPOC. You know, again, I want this line projecting onto all my charts, but I don't want every one of these naked VPOCs all the time projecting. Not all the time. I don't want this one. I don't care about it. Why? It's too close to the price action. So if I did this automatically, all these other lower time frame charts, first I'd have too many charts that reference this, so that would get messy. And then second of all, I'd have way too many automatic lines on my chart. And I want my lines there because I've thought about them and because I've done the homework and gone through my process for those lines to be there. I don't want them there automatically so that I'm just blindly going, hey, I got an NVPOC, I think I want to short it. Like, no. Me going through this whole process familiarizes myself with what the rotations could be into that area. So now I'm intimately familiar with scenarios of how the market may move into that zone and what I'm looking for, as opposed to maybe I don't go through that process because I already have all the lines automatically on there And then I quit going through the process of marking it all up. And that's, again, those are all things that help you with remembering next week. So I think we're getting close here. I'm tempted, really tempted, to open this back up and to talk at length about the extended trading hours and the sessions, USA 2, Asia, and Europe. But I'm 2.5 hours in. It's 1 o'clock, and I'm going to be making my family lunch today. So I'm the chef. So I'm going to have to finish this up without getting into that. But dang it, I love trading and I love talking about this stuff. Hey, Panama, I used to have a Discord. I don't know, it was like 1,500 people in there. And then I got rid of it. Kapow! And now I have lots. We meet tomorrow again. Tomorrow? What? Emmanuel, I probably won't be around tomorrow. This is just Saturday and that's it. But kapow, I got rid of it. Took too much of my time. I'm not done. I'm going to do my weekly TPO. Have you guys forgotten already? So I'm not going to do the expanded ETH stuff, but gosh, it's, oh, you guys, it's so useful. And there's a gazillion iterations of this stuff that I can go over. I could probably talk about this TPO and the way, here, I'll look at it. Here. And the way, it's like this. Like that. Right? Oh, sorry. There you go. The way this movement is all occurring, right? Oh, it's just so beautiful. But I noticed this stuff all on the time, so I know how the profiles develop without having to expand these, because the shading is all based on time. So I know that they look like this. And I trade every day, so I kind of remember the sessions, but this just hammers it home. But, oh, if you see, look, I'm just such a sucker for teaching. Just want to show you guys. I load a lot of days. 300 something days in my TPO. Notice there's no lag. I have 4 TPO charts that have as many days or more. In Windows, those TPO charts will lag. Not in loading, but in actually moving them around on the screen. So like this, we have the hand grab tool, the grabbing tool like this. See how it's like no lag? In Windows, all that will lag. But look at this. Look at Asia. Asia's a buyer, right? Europeans are sellers. Okay. The RTH goes in to the consolidation of Europe, so the consolidation breakout of Europe, and the volume point of control for, and the TPOC for Asia. So what's Asia? What's the VWAP for Asia? The VWAP is 42, 68, 30, no, I'm sorry, 42, 61, 77 for Asia. Okay? Look at the volume drop here, 42.60. When they lost 42, look, straight down, right? Little tiny volume node here. That's the top of Europe, right? You can just see how it's interactive. Once Europe lost, look, low volume node, whoosh, through there. Look at that. This, they actually did some volume because Europe and Asia both bought here. Once we lost all that, whoosh, capitulation, right? Whoever forced this, sold this market down. When these guys, when the folks that were right here got the win, they covered into RTH here. And when they came back up here and tested Asia's low, whoosh, right through, came back up, punked, back into the LVN, defended the HVN, whoosh. I mean, this stuff is beautiful, right? Oh, man. Now, look at USA 2. A short little session, but it holds the highest, some of the highest volume over time for all these, compared to all these sessions. In fact, it has the most of all the ETH because it's all the hedge fund positioning. Their volume point of control was here. Look. Whoosh. Right to it. Bounce. Once it lost singles below all the hedge funds positioning and the close. So it's not only is it settlement, but it's the and it's not surprising because right after cash close you get a lot of volume. But look, it happens to be, which is just another way to look at it, but it happens to be right at the close. So settlement for that day, we don't know what it is based on this because we don't have more than 2 days. So we have this one and this one on our charts, but not this one. I could probably go back and scroll and look at it, but whatever, it's not that important. I know it's close because settlement was down in here somewhere. Look, we lost it. We bounced off it into LVN. Volume, sold it. Once we broke down here, singles. In other words, emotional, get me the heck out of Dodge. Everybody wanted out. Boom, singles. LVN, rapid selling. What'd they do? They covered again here. Then into the close, more emotional selling. Oh, because why? Well, we already went over this. Look left, lows, all this stuff. Anyway, and then huge volume absorption down here on lows. And then we had all those daily trend lines going through the chart somewhere right here at 41.30, which is when we were at 41.20. I tweeted out, when the time comes to buy, you won't want to, Walter Deemer. You guys go look at my Twitter feed, right? I got long. Took 10 points. Not much. I didn't get 40 points or anything. Just took a scalp. Defined risk. 2-hour trade. It was great. But you could see how looking at this kind of thing and knowing how to analyze it can help quite a bit. Right? And look at here. This is T plus. Well, this is settlement that this bounced off of here. Boom. Right? This is why I have all these things on the chart. I'm always talking about settlement. Highest concentration of the volume for the E-mini all day long in the last 30 seconds. Of course it's going to be relevant. And it's the close, right? All the people that buy or sell closes based on where the market closes, they're also going to start positioning. Oh, strong close. I want to go long, right? What? This, oh, didn't close on highs. This was a breakout zone. The pullback. Now, what is this? See, this is why I like USA 2. Earnings. Right? What was it? Amazon. Next one, Apple. Right into T plus 2. Rejection. I took that trade off T plus 2. This was a sweet setup. Why? I was looking for support from here, from the European session, and into all these singles. When it hesitated down here, I also got long. NASDAQ. Took about 20 points, but it was times a fair number of contracts. So I made a lot of money right there. I waited for the extreme because I don't like to get caught up in the middle. I don't. And I knew Apple was coming. So Amazon had earnings right at 4. Apple 4.30. And then I took that short because it ran out of gas up here at T. And then right above settlement, or T plus 1 at the time, it rejected immediately down to settlement, which is where I got my trade. I did not get my trade above settlement. I got it at settlement on the way down where it rejected. Because it was such a massive rejection. Boom, just sell it all with, I mean, just the algos were nuts that I couldn't get into that wick. It just happened too fast. So I was lucky to fill, but I filled right on the ask. I think, again, my DOM is 1 point aggregation, so I'm always filling on a whole number, always, unless I am into the spread unknowingly, and that happens. I go into the spread unknowingly too. A point doesn't matter to me. It just doesn't for my position sizing. Most of my stops on the NASDAQ are like 12 points during that kind of volatility. And then at 12 points, if the position is small, I'll move it up to like 20. If I could just see like, it's just a little oscillation. We're shaking out the weak players, and then it'll roll over and decide direction. So that's what it was. So again, another 2-to-1 trade. So anyway, you can see how breaking this out into USA2, which is the hour after the cash close, is useful for things like earnings and hedge funds and institutional positioning post-close. So you can use that for sentiment. Look at this. Here's the close and the RTH. Look at how we closed in the hour afterward. Whoop. Look at what we did. Look, didn't even come down. Consolidate into, right in the open, or the close of this, somewhere in here, or the top of this session here. Bounce, whew, go. And then, came in, Europe, pull back a little, whoosh, all the way to the top. Now, funny how this works. Let me look at this real quick. You see this, European Open? Look at the initial balance. I said I wasn't going to talk about it, but I am. Look at initial balance. This is 50% of initial balance. See how we extend 50% of initial balance, Europe, and then reject? So you tell me if these lines aren't important with a session starting from 3 a.m. Eastern Standard Time. They are important. So I had all these lines on different charts at one point, and I got rid of them all because they cluttered it up, but I know if I'm up at midnight my time, that's going to be a relevant time to look at in the chart. This, I'm putting it up just because it's going to be easier to explain it to people, and it is an improvement for the TPO because it tends to play out so nicely like this. But how sweet is this? So anyway, I've done a YouTube video on how to make all these zones. It was my last one. Give it a watch. Watch the introduction because I talk about why all this stuff's important. Some of it's repeated here, maybe a little more depth here, and maybe I missed some things. So anyway, very, 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 very cool. There's so many little nuances here that I don't even have time to go over. It takes me like 10 hours, 20 hours to talk about it. Like, it's too complicated. Well, do you want your surgeon to be a simpleton? Hey, your limb is looks pretty hacked there. I'll just cut it off. Keep it simple, stupid. Let's just cut it off. No. You want that son of a gun to know his bleep well. You want him to be able to repair that. So there's nuance. Guess what? The market is the same way. Anyone who tells you anything different is not trading a good game. They're struggle saucing unless they have a gazillion simple setups for different market conditions. But guess what? When the market goes from VIX 11 to VIX 45, you are going to be in a world of hurt and probably blow up your account because you don't know context and you don't know setups for under various conditions. So be a good doctor of the markets. Study your beep off, right? And you might stick in this, you might stay in this game more than a few years. So the turnover rate for trading is high. But if you are a studious person and you commit to learning, you are increasing your likelihood of success by a lot. And, Listen to people who can predict the market. Don't listen to people who give you predictions that there's plausible deniability. In other words, if this then that, then maybe this, but if we go here then that, but maybe if we go here then this then that. And you're like, how the heck do I play that? And after the fact, they picked the one that was right. See, one of my scenarios was right. Well, it was off by 20 points, but it's a zone. Huh? How are you supposed to navigate that? BS. Find somebody that calls the market ahead of time and says, if this then that right now, this is the scenario. If it plays out, boom, you found yourself a winner. If it doesn't play out, repeatedly, all the time, and they just suck, guess what? They ain't going to do it for long, number one. And number two, they're terrible. So find people like that. Don't find people showing you P&L that can be faked. What can't be faked are real-time calls. So if you're in a trading room, they never do real-time calls. They never trade their own account. They never make real calls. They never predict the market. It's all hindsight. Get out. Save your money. But if you're around somebody that's able to call it ahead of time in real time, then stick close to that person and learn. Okay? Anyway, off my little rant here. All right. Let's go up here to the weekly. Let's finish this bad boy out. In other words, what I'm trying to tell you guys about traders and finding people to learn from, because I'm like, hey, go learn. But what do you learn? Who do you learn it from? You just learn a whole bunch of crap. I mean, if you go learn from, I don't know, some podunk university of a bunch of naturopaths that think that, if you hold the vitamin bottle out in front of you and push down on your arm, and your arm is weak, then you need that vitamin. If that's your doctor, and that's who you're learning from, you ain't going to be a very good doctor, are you? So you got to find the right sources. What I'm telling you is find sources that are able to predict it. That's it. If they're not, or they give too many scenarios, then come back and brag about the one they're right in. There's too many like that. And the reason that they have so many subscribers is because they have plausible deniability. They can deny that they were ever wrong because they gave you so many scenarios. And thus, they're good at marketing, not necessarily trading. Okay? So, very important. Later, Emmanuel. I haven't been looking at the chart. Jonathan, thanks for stopping by and commenting. Anyway, my rant. I'll put this up. I wasn't actually going to put it up today, but I'll put this one up. So here we go on the weekly. So you notice now that the weekly has this 42.13 high volume. Look at this. Perfect distribution. Bell curve. Look at that. What do you make of that? That's interesting. Okay, so I'm going to put levels now on the weekly. And it's going to be fairly simple. And we're going to call it the week of 417 forward. See that? 417. And we're going to call it N VPOC and N TPOC. Naked VPOC and TPOC. I'm just looking. Now, this is what I wanted to get to. You see how on the weekly profile right here, look at how crazy small the volume is all the way up here. This is all in a crazy low LVN all the way down. So you see that this profile actually looks, this volume profile right here actually just looks like a straight line. So let's widen this out and see what we can see on it. Look at this. Look. It's still just a straight line. Isn't that crazy? So because this is an LVN like this, you have to be open to the idea that even though we spent time here, there's no volume on the way up here. And then they distributed the volume here on these weeklies up here. So the fact that we could come back through here when there's not a whole lot of trapped traders or anything, the traders are all trapped from here. All right, maybe some shorts, which is why we bounced here intra-week. They're all trapped from the prior weeks here as we broke out of this area, right? So the fact that we spent some time here during the week, but then we just rotated straight up with hardly any volume, says a lot. And I had zones marked up here to this extent that said higher time, low volume. In other words, if we come back here through here, we may rip, which is why I put this fib zone in. Look at the volume, just nil. So extreme LVN. So one of the things you can do, so this weekly profile compares the volumes, the visible volumes on the volume profiles to other, it compares all the visible volume profiles. So if we go switch this setting on VBP for TPO chart, I think it's somewhere down at the bottom. Volume profile bars length relative to all visible. We set it to no. We're going to see a little bit on the weekly where these volumes are. But again, relative to everything else that transacted around it, there's very little for that week. So just keep that in mind. Now look. Now you kind of see. Look, a little bit of volume through here. Little bit of volume through, just right through that golden fib zone. Little volume through here. Notice the close, the bounce. See that? So this is where the last bit of traders got ultra mega trapped. Where did we bounce? Right there. Right. So kind of cool to look at the aggregated weekly because it can tell you the picture of all these aggregated dailies, and you just all of a sudden you get a very clear picture of where we might actually bounce. So, but again, this volume is like hardly any. It's just a good spot for a counter trend rally that you can short. That's it. Right? And that little bit is what propelled the market up. And they were happy to take profits here and get short again for another leg and then really distribute it out. So really interesting to look at it from this perspective. Okay, so go back, change the setting to yes, because just like my footprints, these are important. Now look at all these naked weekly TPOCs and VPOCs, and then look at all these essentially singles here, all the way into what? Double weekly naked volume point of control and TPOCs right at what we had marked as our support area, 39.50. Fascinating, huh? See how these things line up? So all these singles left over on the weeklies, all this exuberant buying, it's the LVN that we looked at on the daily and the weekly charts. See that? How it leaves behind singles on the weekly? You see how this all comes together? Right? It's just different views of the same thing, but this can really make you think about it and give you precise levels and reminders like, dang, there was emotional buying, short covering through these areas. If we come back into them, it's likely we're going to push in fast initially and then maybe bounce and fill it in. That's how markets work on higher time frames. They fill in the LVNs, they get to the next HVN, maybe they take some stops, Everybody capitulates, and then all the shorts from that area, the longs buy, and the shorts left over from that area also start to cover on the bounce, and they propel it up. And then the longs who try to get the best entry on the HVN and stop the market, the big, big, big money. And now, I guarantee you during that time, all the news is going to be like, it's dead, sell everything. And they're going to have bulldozers waiting. And they're just going to scoop. You're going to see 5,000 ice, 5,000 ice, 5,000 ice, 5,000 ice, 5,000 ice. If you're watching your footprint, every 10 points, every 15, 20 points. And then you're going to see the volume per second just go crazy on some of these days. And the news are all going to say, it's over. And then it's going to bounce on that zone, unless it doesn't. But this happens over and over and over and over. And it's going to go fill in that whole LVN. You're going to have a weekly that looks something like that or something. All right, just going to be a big fat like this. Maybe it tests back up or something. And it'll fill in this whole prior LVN zone. Or look at me. The whole prior composite LVN zone, like that. Right, here's that HVN, right in this area. And then you get the stop run, and then quick buying. All the shorts now are like, oh no! Oh no! See, they're all short from here, because remember, people are wrong. They'll hold, they'll add, people do all kinds of stupid things. They're like, what, for that many months? Yes, on all kinds of time frames. On the highest time frames, you get the most vicious buying off these levels, off very, very, very high volume nodes. And that's why they work, right? And that's why you should chart high time frames for and overlay them onto your lower, because they give you the very best setups. Anyway, and then the shorts here will go, ah! And they will let it rip right back through this LVN. And all the short-term market profile goes, see, LVN, price just moves right up. And then, you know what, the big money who bought this whole area, they wait for it. Because this is, again, it careens right through on the first pass viciously. They accumulate shorts. They support the market. But it actually goes up on a weekly. Goes up on very low volume. And then they're like, look, prices, all the volume profile goes, oh, look. This justifies my claim of I'm an LVN guy. Market doesn't like to spend much time. You know what'll happen? They'll test this other breakdown zone, and they'll let the market fall. And everybody will get bullish, and all the retail people will start bidding because there's a reversal. They'll bid this whole zone. And this money that's averaged in somewhere in here, they're so big they can't just sell with retail. Retail thinks bullish at this point. They'll start to sell it into this whole zone. And their average will be here, and they'll get out some here on this swing weekly kind of time frame. And they'll sell into the retail bids and sell. Some will capitulate, and then this will all fill in. They'll reestablish their bias in this area. And then you'll get a profile that looks something like that. That's why it happens. Okay? Who knows where it's going to go here, where it's going to go. You just don't know. But when this happens, you start to look at sentiment. Okay? You start to look at individual stock names. You start charting the NASDAQ top 25 market cap. You start charting the S&P top 25 by market cap. And you start getting a bias based on their charts. Maybe you create your own Fat Man G index, right? So those are, Fat Man G just stands for FATMANG, right? So Facebook, Apple, Microsoft, Tesla, Amazon, Netflix, Google, something like that, right? Conglomerate of symbols. And you start charting, you go, oh, this is a bullish setup. Meanwhile, on the equity index, you're like, what the heck's going on? And if at this point everybody's super bearish, CNN, Fear and Greed, 20, 18, everyone's talking about bonds, right? they're rotating. There's a big pullback in all the commodities or something. They're rotating from sectors, right? Maybe at this point, the tech sector is still pretty beat up. Well, guess what they like to do? They like to, maybe the Kathy Woods of the world have said, I'm selling, right? You look for these events. Maybe a few hedge funds blew up. Everyone's like, short the bounce, because that's what's happening. Now you got your idea of sentiment. Too many negative, big money silent, right? You get the whatevers, the Credit Suisse going, we're super bearish and we're expecting 2,900 on the S&Ps. And all these news events hit. And then we false break a little and then whoosh, rip back through, become a buyer. Just saying, because the sentiment for the dummies it's skewed too far. So, mean reversion play, right? Big money has to play against weaker money. Otherwise, if we're all on the same side, we all have to get out at the same time. Markets crash. That's unsustainable. Big money wants to buy against your weak hands. They want to sell against your weak hands. Why? So you can capitulate as and they have something to sell against. So they got to be doing the opposite of the big sentiment. Does that make sense? I hope it does. It works, guys. It does work. But you're not going to get a whole lot of people teaching you this stuff. That's okay. It's hard. Like, it's too many different things. Too many different things to keep track of, TYP. Yeah, you're right, it's a lot. But, you know, how do you become a doctor? You build, you go through hell for 10 or 12 years, right? And then finally you get paid. So in trading, if you study really, really hard for years, you'll get it. You will get it. If I was trying to sell you something, you know what I tell you? I could teach you in 6 months, and you'll be a professional, and you're all smart enough to do it. Booyah! Buy my course. Only $699.99. If I was trying to rip you off, that's what I would tell you. It ain't the truth. I ain't trying to sell you anything. Okay, so let's see. We've got this weekly. We've got this single level here. All right. So let's go take a look. See where these lines emanate from. Whoa. There you go. Beautiful. 39.40. Okay. We are going to call this, because if the market falls this far, I'm looking at a zone. I am not looking at a single level, looking at a zone. So we're going to, oops, the wrong thing here. Zone, red. We're going to call this is the week of 321, 328. Or, I'm sorry, 314, 328. Week starting. What is up with that? Let me see this. Hold on. No, yeah, it is. Week ending 321. And then 328. Okay, cool. So we'll make the zone like this. We'll modify the text. And we'll call it 320. Oh, I'm sorry. 321, 328, N, VPOC, and TPOCs. You know what? It's going to overlay from my weekly chart as a buy zone. And you know what we're going to get? We're going to get double confirmation if it gets there. So you remember that balance area extension we were talking about an hour and a half ago or something? That's what this is going to overlay. All right. It's good to know that. Call these weeklies. So this whole, look at the gaps even. Look at the huge gap. Should we mark that gap up? Yeah. Yes. Yes, you should. All right, gap. Right here. We're close. Modify text. What is that? Oh. Let's see. What is the gap here? 4.4? Yeah, 328 to 4.4 gap. So we'll call it the 4.4 gap, right? Market gapped up. We'll call it the 4.4 gap. Getting hungry. 4.4 gap. Okay. That's pretty. Getting the big levels on. Getting the big. Now, hey, it's right below us. What? Okay. Look, we have this weekly NVPOC and NTPOC. Let's take a look here. I want to see how it exploded from here. Big volume explosion to this volume, 41.13, which is what? Really close to where we're bouncing, isn't it? Right? Even 41.22, right? Where we just bounce like a crazy person. So this is going to be important too. So a potential bounce zone. But remember, keep in mind, we're breaking out of balance. You got to be careful going counter trend. Take your stop, don't average down. So you're going counter trend. If anything, target this zone. Get short and target that. If you have that bias, the markets, if you're reading the tape and you're like, poof, they are selling this market. There is no interest to take this market up. All right, there you go. Go for it. Okay, it's a zone. It's a weekly. So, what is it? 4. It's still 4.4. Yep. It's the week of 4.4. So 4 and VPOC and TPOC. I am getting tired, guys. It's alright, we're going to still look at the footprints and all that stuff. I want to show you guys one more thing before I go. Some more chart goodness. This is enough. My daily's all marked up with precise levels that are going to overlay. This is enough. Alright, let's get this back. Get this scaled proper. Boy, look at that. Look at that naked weekly TPOC, VPOC. There's also a daily one, isn't there? Right up, or not, maybe not. Maybe not. Yeah, there is. It's right here. We'll get there again someday. Mark my words. So if you're young, keep buying dips. Keep buying dips. Keep investing. Market falls 25, 50%. Buy and hold. Right? Let your money compound for your buy strong stocks. Read I don't know. Read Mark Minervini's books. They're great. Read William J. O'Neill's books. They're great. Yeah, for long-term investing. Buy strong stocks. Buy some ETFs, some index ETFs. SPY, right? QQQ. Diamonds, right? So if it drops that much, invest. Separate your day trading account from your long-term account. Don't touch it. You know? Don't try to ride every wave. If you have a part-time job or you make money day trading, if you can, take some of your day trading money and try to put it into that longer-term account to buy big dips. Just leave it alone. 50, 60 years, be the next Warren Buffett. Anyway. Easier said than done for all of us strugglers. Okay, so this one's done. Let's go up to the footprint chart. Alright, let me get... Oh, you know what? I said I was going to go back to the 30-minute chart. Let's quickly go back to the 30-minute chart. Top 49 left side. Okay. So now we see some levels here, right? Ooh, that is going to be a nice shortable level. You see that? High volume. We get back here, trapped. Maybe we go above. So there's a few entries. Below rejection, into the gap. We already have the gap marked. Into these high volume nodes. Trap traders from this vicious move. And you know the E-mini loves to take out stops. So right here would be another area. So take it out and then right in the bottom of the fib zone, golden fib zone. Oh yeah, so if you get those stops, great place for a potential reversal. 10-point stop or so. You get a good footprint setup. Whoosh. Charles, any good resource to learn footprint and tape reading? Yes, Charles, me. Got a lot of videos. Check through my YouTube. I have playlists, and one of them is footprint. So it'll include every footprint video I've ever done. Let's see. Oh yeah, the viewership's dropped way off. That's okay. I'm almost talking to myself here. Almost. Appreciate the comments, Charles. Maybe I should just cut it off and not show the footprint. I don't know. I'm pretty hungry myself. So yeah, you know what? That's what I'm going to do. I'm going to avoid all the other stuff. This is the meat of it. That's all good. There's other lower time frame stuff. I can go over the 5-minute to look fast at structures for the last 5-minute charts that can give you more setups for the next few days. And then you'll see all the overlaid and how they all work together with the 5-minute charts, but I'm not going to do that. Too many people, not alone yet. Too many people left, and I'm hungry. So another time. Have a great weekend, guys. Thanks for stopping in and chatting, and nice to see you, Emmanuel. Maybe we'll connect one of these days and chat about markets. But again, I have been, to give you an idea, Emmanuel, I've been, when I was in Discord, I was averaging 5 to 8 trades a day. I looked back since I've shut down the Discord. I'm averaging, right, total positions every day, 18. And so my profitability has gone way up. So you must understand, my friend, not only do I have more time with my family, but I'm focusing more, I'm less distracted, I'm taking more trades, and you knew that for the short time that you were around me in Discord, right? You weren't part of the inner group yet, I think. But for the short time, you knew how distracted I would get, how many questions people asked. And instead of, I'd say, look at this market setup. I'm talking about it. If I wasn't talking about it, I would have just taken it, because I can't. It's hard to multitask and trade well at the same time. And you guys are asking me questions. So there's that. I got more time with my family. I've got some other trading projects that are almost done. Can't share with you guys, but they're almost done. And they're going to change my world as a trader. Some of it's going to be into Sierra chart. So cool. I will never probably share them with you guys. You'll see them on my charts, but when you ask me about it, I'll just say, can't talk about it. But they're almost done. And I've had more time to do YouTube videos, right? And all these other things that are so much easier to manage than 3 hours a day helping people for over a year, right? And in this way, all the stuff I say is documented on YouTube, so you guys can go back and reference it, learn from it. But sure, is it nice to have somebody who can guide you through the market? Of course, but I have my own life, and my family comes first. And I was having some health problems because I was stretching myself way too thin. And I'm happy to report in the 2 months, I've totally focused on my health. And my health has improved dramatically to the point where I'm off medications completely. I've lost a bunch of weight. And man, I just feel great. So balancing all that, you know, there's some people I still maintain close relationships with from the Discord, and I've had to do that once a week with those people, because if I'm doing this with too many people, I just turn into everybody's slave. And you know, each person is trying to be respectful of my time, but they don't realize I'm slotting them in between somebody else. So, you know, some people are better than others, but time management is tough. Time is the commodity that is the most valuable that you'll never get more of. You've got this tiny little sliver called your lifespan, and it goes fast. And what are the most important things? You know, trading's cool, but I love my family. I like trading. I love my wife. I love my kids. So anyway, I leave you with that. Have a fantastic weekend, guys. I hope you learned some things, and hope you take some of this stuff into next week and make good decisions in the market. And when I say good decisions, not necessarily all winning trades. That'd be nice. But I hope you guys control risk. That's the most important thing as a trader that I can convey to you guys, is understand risk. There are a lot of traders out there, people that have been doing it 20 plus years, and I've seen them blow up or more than have small accounts and act like complete newbies in front of other people, all while maintaining they're the best, or they know so much about Monte Carlo or other things. I've seen some crazy shit. I cursed. I think that was my first curse word of this whole YouTube. It's okay. YouTube won't censor me for it. But and I've seen worse than that. I've seen people blow up $150,000 future trading account in a month, all because they ignore risk. Don't do it. Define it. Learn Monte Carlo. Stick to your rules. Don't talk a big game and not do it. Practice what you preach, right? Otherwise, you're just like all the other people out there that are going to absolutely demolish their accounts, okay? And you just, man, just don't do it. Anyway, a lot of furus. It's not just furus, man. It's just you gotta control risk. Watch my Monte Carlo video and then figure out your risk and never make that mistake again. Most of you watching this will make that mistake, and it will sting you so bad that you will never do it, hopefully, again. And some of you will need to do that before you finally learn. I get that, but I'm like the parent that's trying to tell you right ahead of time, please don't drive 115 miles an hour in downtown LA traffic on a Friday night. Your probability of death is high. You might survive it all. You may not die, but I'm trying to save your life as a trader. But experience is the greatest teacher, so, you know, I get it. Anyway, it is the most important thing. So, and for a lot of you guys, you need to learn how to trade with real money over a longer period of time before you can get good at it. And trading with real money, your own money, is very, very, very important, because trading with your own money has a completely different psychological profile associated with it than trading someone else's money in like a funded program or even sim. And so you are really cheating yourself if you're trading a funded program and think that you're going to be able to take your own money down the road and actually trade it as well. Because the psychology involved is completely different. So my advice is learn to risk manage a small sum of money, make it real money, and lose it slowly over time. So you learn all of those rules about risk, and as you get better, keep your risk under control, then you start winning, and then you compound over a long period of time, and then you start to size up with your increased account size, and you're on your way, right? And at a certain point, you're going to be looking back 10 years from now going, best thing I ever did. Listen to that TYP guy that said, manage my risk. And some of you are going to be like, I want to get rich this year. And you are going to size up. You're going to have a few good trades and think, that guy was an idiot. If I didn't take risk, I wouldn't be where I am today. And it's just a matter of time if you trade that way, where you're going to blow up your account, and then you're going to come back and say, dang it, I wish I would have listened to him. And you know what? Go read the Market Wizards series. Go read all these guys that have been doing it 20, 30 years and are billionaires, right? And read what they have to say about risk. They echo the same thing I'm telling you. And I can tell you from experience, when I talked about what I did in 2017, 2018, with NASDAQ futures, trading way too many of them and blowing up 25 to 30% of my account in a single trading day of all my trading funds. That stung, and it was a lot of money. That stung so hard. And I knew the rules back then, but I ignored them. And just like driving a car really, really fast, futures, the F stands for F1. The vehicle you're driving is highly, highly margined, and the market moves like a mofo. It moves fast. You don't play with stops, you don't play with risk, and you size up, and we have a black swan, like that happened at that time, you can get creamed. Creamed. I was adding NASDAQ futures every 20 points for 100 points, and it went 150 points lower. I got out for a massive loss, but I could have lost my account. All because, I'll scale in. I'll be a big boy. Nope. Don't do that. Don't ignore your rules on micros, on minis. Don't do it, because you are so levered up. You are in an F1 car, and it only takes one mistake in an F car for you to hit the wall, and boom, fiery explosion, you're dead. And in this game, you could owe your futures broker more money than you have. Okay? Sometimes markets gap down, they hit limit, and you can't get out of your position. And your broker's saying, we're going to market you out, and then it gaps down 90 points. And you're long 10 E-mini futures contracts. 10 times 9, 90, 900 points. 45,000, you have a $20,000 futures account. $40,000 in student loans. 10,000 in the bank account, living week to week in California somewhere. And now you owe your broker. And you owe your broker. It's not like crypto, guys. It's not like crypto where that's it. You're like, nope. You're not. In this world of futures trading, you can owe your broker. In the crypto world, nah, you're not going to owe your broker anything. They're not going to come after you. You lose your whole account, but that's it. So, manage risk. Don't gamble with your happiness. Don't gamble with your trading. Telling you, if you have unrealistic expectations about trading, that you're going to become a millionaire overnight. If you're reading all these subreddits and Wall Street bets and looking at these guys going, that's what I want, then you have the wrong idea about being a professional trader in it for the long haul. You're not going to be in it for the long haul. So anyway, hello, over in our margin there. Can you pay, bro? I know. Anyway, have a great weekend. I'm finally out. Peace.